So in this video, we're going to be covering another stock for 2025 and for long-term investment purposes. And they've had quite a bit of growth over the past couple of years. So we're looking at SoFi. SoFi is a banking and investing platform. It's supposed to be like a one-stop shop for its members' financial needs. They offer a diverse range of products, again, from lending to banking, investing, and they cover things like checking and savings accounts, investing, credit card, insurance, and more. So basically an all-in-one financial services company. Motley Fool also just said recently it's one of the best financial stocks you can buy today. SoFi has tripled its member base since the end of 2021. Less than 10% of Americans are familiar with SoFi's brand. There is massive potential to grow SoFi's two smaller lending verticals, and this could help take the company to the next level. They also recently hit a record high after a 70% 2025 rally. So if we look at their earnings report for Q2 2025, they had a record adjusted net revenue of $858 million, up 44% year over year, beating analyst expectations and leading to a raised full year guidance. So obviously you don't want them to just only do well in the past quarter year over year, but also you want them to adjust guidance for raising expectations the rest of the year or for the next quarter. So all of which looks very good. Now, if you look at their actual stock right now, so let's look at what the price is. The price is relatively low compared to a lot of the stocks I've been covering lately. A lot of the major tech stocks, things like that. If you look at where they're at right now, so if you look in the past 6 months, for instance, they're up 77.4% in the past 6 months. Year to date, up almost 76%, almost 77%, I should say. In the past year, up 221%, which is amazing. In the past 5 years, up almost 140%. So there was a little bit of a dip in 2023 and 2024, but they are on their way back up and doing really well in 2025. If you compare that to the S&P 500, which is what we are trying to beat here, the S&P 500 up 10% in the past 6 months, year to date 10%, past year 15%, 5 years about 85%. So you would have been pretty easily beating the S&P 500 with SoFi if you had invested in them over the same period of time. So if you look at their PE ratio, they have a 50.6 PE ratio, which is pretty high, but there are a lot of stocks with high PE ratios right now, and that seems to be the new normal for a lot of these companies. So obviously, it depends on whether or not you can get justifiable returns, whether that PE ratio is okay or whether you are actually overpaying. So it's not only just the PE ratio itself, it's what kind of returns could you get for that PE ratio. For instance, no one cares what the PE ratio has been for Nvidia because they've had such massive returns. Now, dividend yield is nothing, so you are solely looking for growth with the SoFi stock, which they've had really good growth, especially over the past year. If you look at their year over year change for their financials here, it looks really good. Net income, net profit margin, earnings per share are going up through the roof. And if you look at their balance sheet right now they do have 41 billion in assets versus 34 billion in liabilities. I would like to see closer to a 2-to-1 ratio for a lot of stocks, but again, that's just one small indicator. It's not something that would make or break whether or not I'm going to buy a stock. Price to book is relatively low at 4.16. Now, return on assets could be better. That's pretty low in terms of usually you want something like 5 to 10%. Now, I also like to look kind of how have they done over the past quarter or just the past 3 months. They are actually up about 85% over the past 3 months, according to Robinhood, which is great. If you look at what hedge funds are doing, hedge fund ownership of SoFi increased by 2.49 million shares versus Q1. So you can see right here in Q2, a lot of buys from hedge funds and very little selling going on right here. If you look at what insiders are doing, again, insiders, it's kind of a weird one of whether or not you should really even care what insiders are doing, because a lot of times you only have, like one purchase or one sale for a period of time. But they do have one informative sell of 174,000 shares in the past 3 months. And if you look at August 2025, there's more buying than selling. Now, analyst ratings actually have them as a hold right now, which may be a little surprising to a lot of people because they have been doing so well. They have a 29% buy score, almost 46% on hold, and then 25% say to sell right now. So there may be something they know that we don't. And again, that's based off of 24 analysts. A lot of companies have more analysts than that. Some of the more established stocks that have been around for decades, but still a decent amount. Now, if you look at earnings and how they've done compared to estimates, they usually beat. They've done really well. And they keep raising their guidance over time pretty consistently, which is also a good sign. Now, you can't get their EV to EBITDA because they are considered a bank stock, so they don't even have one of these. Also, if you look at their price to earnings ratio on Robinhood versus Google, they have a 51.67 price to earnings ratio on Robinhood, and it's a 50.6 ratio on Google Finance. So again, sometimes they are a little bit different from each other, but in this case, they are close enough to not really be an issue. If you look at the PEG ratio of SoFi, they have a 3.15 forecast 12-month forward PEG ratio. So I like to look at this as well, and this kind of accounts for growth over time and not just a whatever today's PE ratio is. So this is a little bit high. A lot of times you want something like around 2 or lower. But again, sometimes the returns justify a higher ratio. But just to keep in mind as one indicator, that could be a little bit better. Projections over time look really bullish. I mean, they've pretty much always beat on estimates, as you can see. And over time, they're expected to do really well. They keep raising EPS forecasts over time. Now, if you look at how people actually rate working here, are they a well-managed company? Do they have a good company culture? Or is it kind of toxic? Or do they have good leadership? According to employees at SoFi, they have a 3.7 out of 5-star rating overall for what it's like to work there. It's pretty good. 65% would recommend working here to a friend. It's not too bad. And then a really high approval rating of the CEO at 82%. So you love to see that. Now, one other thing I wanted to touch on that I don't normally touch on with every single stock analysis is what the Federal Reserve could be doing. Now, people have been talking about, the Fed rate cut could be coming anytime now. If they have a federal interest rate cut, because SoFi is seen as a banking stock, I wanted to see whether or not that would help or hurt them. And it turns out it could likely help SoFi stock by reducing its funding costs and stimulating consumer demand for loans, especially in its core lending segment. Lower rates also make future earnings more valuable, a significant benefit for growth-oriented companies like SoFi. So if we do end up getting that federal rate cut that everybody's predicting is coming any month now, this could actually make SoFi do even better and be even more bullish for their long-term prospects. Now, I also wanted to look into, what is the main reason SoFi stock dropped from 2022 to 2024? So again, if you look in the past 5 years, doing really well, 2021 up to $25, and then 2022 started to drop quite a bit, and then started going back up around the end of 2024 going into 2025. So a lot of this was primarily due to macroeconomic factors, including a stock market correction, rising interest rates, things like that. So again, if the interest rates go down, if there is a federal rate cut, that could greatly improve their stock that's already on its way back up before we even get that rate cut. So the reason that these analysts that Robinhood compiles on their platform, they're not Robinhood analysts, they're like Wall Street analysts. But the reason they have it mostly as a hold and not a buy is because of the high valuation. Apparently, compared to many other established banks, which you have all sorts of different ones, you have JP Morgan Chase, you have Citibank, you have Bank of America, etc. Even after recent dips, they suggest that the stock's impressive recent growth is already priced into the shares. So again, a lot of their growth was very recent as well, which could indicate that maybe you would be worried about whether or not they're going to keep having that much rapid growth or if they're going to level off a little bit for a while. Again, federal rate cuts, whether they come or not, if they do come, could help that keep rising rapidly. Also, being a banking stock you got to think about, well, if you have too much of this type of stock in your portfolio, you could be more at the mercy of economic conditions, which have a big effect on bank stocks, although they can also be pretty safe if the economic factors are actually steady and stable. But obviously a lot of stuff's going on in the economy this year. We've had tariffs, we've had all sorts of interesting stuff going on with other countries, as well as some kind of scary things coming out about the direction of the economy going forward as far as job growth and things like that. So I see SoFi as basically like, I want to say they're a buy, but I think you have to lean a little more hold, or maybe even a conservative buy. So maybe somewhere between hold and buy, where you're not putting in, like, let's say you have a monthly amount you usually invest each month, and you're interested in SoFi. I probably wouldn't put that full amount into it, maybe just a portion of it, because there is a lot of potential for growth. If we get a rate cut, it could be great. They've had really nice growth, but there are a lot of economic conditions that are a little scary, and SoFi does not have any sort of dividend or anything like that. They're not as established as a lot of the other banking stocks, and they might get hit kind of hard if we do take a downturn with the economy. And they also might be done having rapid growth for a while. They may just level off in general. And I think that's what a lot of the analysts are worried about. So I would either, again, put this as a hold. If you already have it, I probably wouldn't buy more. If you're really interested in it, maybe a small portion of what you would normally buy for the month. But again, this is not financial advice. This is just kind of how I'm looking at it. I don't actually have SoFi. I've considered buying a small amount just because I do think they have a lot of potential. Their price is pretty low. But I do also have some other similar stocks that have already been more established. They give me a dividend and they've had really good growth as well.